Hi everyone, welcome back. Today is 5/22/2025, and let's take a look at what my portfolio is doing today. So today I plan on managing a call spread and also reattempting to sell a couple puts. So I got a notification saying that my total return on my IREN options has gone down. It says your IREN 613 call credit spreads have lost more than 100% since I've opened them. So that doesn't sound good. I opened this position and made 50 bucks on it. That's the credit I received. If I want to, but this position has now moved against me. So now if I want to get out of it, I have to pay 50 bucks and more just to close these. So I'm going to show you how to close this position and then reopen another one in the future. And that's called rolling this position. And we're going to take a look at that and manage this option spread right now. And, the fun part of options is sitting back, collecting premium, everything's hunky-dory. And then this is the risky and not so fun part of it, is actually putting in some effort to manage the positions that move against you. And this part is more the confusing part for a lot of people in how to manage these. Some people understand how to open these, but as far as deciding whether to let it ride till expiration or to close it, then things get a little more confusing. So let's take a look at these. So you can see right there, IREN 5 credit spreads. My lower strike price was $8.50. That is the strike that I sold a call, and I bought the $9 call. And let's just click on that to get a closer look. And I'll draw on the screen here. $9 call. I bought it for 29 cents. My drawing's lovely. And the 850 call, I sold that for 39 cents. So if I sold something for 39 cents and bought the other one for 29 cents, that difference is 10 cents. 10 cents controlling 100 shares equals $10. And since I bought 5 contracts, then that means multiply that by 5, and that's $50. So that's the, with my lovely handwriting, the transaction I did to get into this call credit spread. It's a credit to my account of $50. So if I sold the 850 call and bought the $9 call, to undo this, I need to sell the $9 call and buy the $8.50 call. Okay. So that's what I did to open this position. To close it, I have to undo what I did. And to essentially roll it, I need to put in in order to open up another credit spread for the future and move those strike prices up. By the way, this chart we're looking at is not the stock price. It is the price of the options. Here we can see details of my position. So 5 contracts. I got 10 cents per contract and open them on 5/15. They expire on 6/13. IREN break even price is 8.60. So with these call credit spreads, the strike price, the stock price when I opened this was below 8.50. And over time it was rising and rising. And as long as it would stay below that higher strike price of $9 or maybe something in between there, then I could still profit. And you can see break even price right there. That includes the money you received from that credit for opening that credit spread. You got some money to that premium because you're taking on that risk with these contracts. So the break even price was 8.60. As long as the stock price stayed below that, you could still make money. But you can see current IREN price is $9.44. That has broken past and rose above the break-even price. It even rose above my highest call of $9. So obviously this position has moved against me, and my next plan is to close it and reopen something else in the future and hopefully either make money or not lose as much. And there's this also this cool feature called Simulate My Returns. Let me click on that. You can see where this price is going to go for these contracts. So here's how to read this chart. Today's the 22nd. And on that left part of the chart right there, this is my current return, down 76 bucks. And you can see as the chart gets closer to expiration date, down there on 6/13, our max loss is going to be way down here around 200 bucks. And this slider is really cool. You can slide it left, slide it right. Current price of IREN is about $9.50. So if the price were to drop, this was to drop, you can see this chart bend. If it dropped 5%, then it's looking a little bit better for us. If it drops 10%, even better. Let's just keep going until we hit green. Okay, so best case scenario, at expiration, if this stock is $8.59, then at the very end on expiration date, you can see a little bit of green. Then we didn't lose any money, and essentially made a tiny profit. But it would have to move down almost 10% in a month. Maybe that's not going to happen. I click on that 9.51, that's the current price. Now if this price keeps going up, you can see this chart starts to look worse for us. Starts bending, and let's just scroll all the way, some ridiculously high price. You can see max loss is like negative 199. Essentially, we'd be down 200 bucks. But that's it. I mean, that's the max loss. So that's the advantage of these call credit spreads, is that, yeah, there is a max loss, but it's better than having to own all those shares and it just plummets to zero, theoretically. So we are going to trade. And sometimes I swear I've seen a button where it says roll the options, like roll options. Um, but I don't see it. Sometimes I see it, sometimes I don't. So if you want to comment of wherever you've seen it, that'd be great. We can try and find that button. Okay, I want to close this position, so close. 5 contracts. Actually, let's do this another way. Let's trade. Let's view all options. We'll just roll it manually. All right, so these expire on 6/13. Now, if I sold the 850 calls, you can see there has a -5 there. I need to buy this to get out of it. So I'll click buy, call, click on this. We got 5 of them. I'll click that plus sign. I think it'll just have to go at whatever price it Robinhood decides. I don't know. All right, so I'm going to buy that low strike and sell the high strike. Okay. It's going to cost me, see down there at the bottom, 36 cents to close it. But we're not done here. We're going to roll it. So let's bump this out. Let's go to June 27th. And now we're going to get into a new credit spread for a call. So normal credit spread, we're going to sell the low strike price by the high strike price. So the low strike price, let's sell the low one and buy something higher. Let's see if anyone's interested in 1150. Yeah, there is. Okay. Let's see what that does. Okay. And let's drag this up. Got a funky looking chart here. IREN price right now is about $9.50. If it goes down to $9, we would get our max profit of about $31.84. If it goes down, we lose a little bit, keeps going down, we're in the green. If it moves up to our break-even price of $9.88, then we start to lose money again. But if I'm able to execute all of these buys and sells, then we could get away with still making the profit on this whole thing. So I like how that looks. Let's try it. Let's hit continue. We got 5 of these. Suggested, let's try 25. Medium fill likelihood, let's try it. Review, swipe to submit. Order pending, hey, partially filled, perfect. All right, that's what I like to see. I think it filled because there's such a high option volume on this stock, and a lot of people are buying and selling options on this. And why are they doing that? Because the stock is volatile, I'm assuming, and that usually means there's more opportunity to buy and sell because the more uncertain a stock is, the more popular these options are. So I like that. So estimated total credit was $124. Um, yeah, and that's how you roll it manually. So we'll click done. This position is now closed. All right, good. So we closed the call credit spread ending on 613. Reopen another one. Let's go on the merry-go-round around again. Open another one to push that expiration date out to 627. And as of now, we made a little bit of profit on that. I mean, it's not realized yet. We don't know until expiration date, until we get closer to that date. But I mean, so far so good. If it moves against us again, then we can just roll the position out again. And sometimes rolling it out will make you lose a little bit of money, and sometimes it will make you a little bit of money. So it's that's the risk part, and options aren't for everyone. They can be a little scary if you don't know what you're doing, but definitely research everything you can about them before getting into them. Okay, so that takes care of that position. So on to selling some puts. Oh, by the way, I bought $40 worth of LH LabCorp. They do diagnostic medical testing services. I usually don't like to get into like these bio companies because they're so volatile. One little FDA approval or disapproval could make the stock spike up or down. A little too uncertain for me. But yeah, I just want to get into that because it seems to be doing well. And we can see little notification. My order to do the 4-leg option has been filled. $25 per 4-option strategy. Nice. Okay. All right, let's go to pay. I tried to sell 3 puts, but no one took it. Let's replace it. Trade options. Let's go up to 620, selling a put. I was trying to sell it for a $19 one. There's little interest. We can try anyway. Sell. Let's do a few of these. 0.15, what will that get us? Let's try it. Pending, placed. All right, not filled yet. We'll see. All right, let's look at YMAG. Attempted to do that, was not filled. Let's replace it. Okay. trade options. Go into 620. Selling a put. Yesterday I was looking at the $14 put. There's a little bit of interest there. Let's just try again. What I want to do here, maybe 0.10. Let's try it. Pending, placed, but not filled. All right, so those are my options. I now got that new position on IREN and YMAX I already had. Trying to get into PEY and YMAG. And you can see that the limit, the ask price is 10 cents, and that's what I put in there. That's the upper limit. Down here, 15 cents, and that's the limit. So I wonder if my orders caused that. That's kind of funny. Yeah, those option volume obviously is lower than the IREN, not as popular, and so therefore lower chance of your positions getting filled. But we'll just try those, let them sit, and if they don't get filled, then we'll just try again tomorrow. Yep, and that's how you roll a call credit spread option, and also how to sell a couple of puts. Thank you for watching.